The bank you trust is actually a thief stealing from your bank account. It is quietly transferring money from your card. Last year, $7.7 billion was quietly siphoned out of American checking accounts. Not by hackers, not by scammers, by the banks those people trusted with every paycheck they ever earned. That number should make you sick, but what should really keep you up tonight is that you were probably one of the people it was taken from. Here is the lie you've been living inside. You believed that if you just budgeted tighter, skipped the coffee, grinded a little harder, you'd eventually get ahead. You thought discipline was the problem. You thought you were the problem. Meanwhile, your bank was running a completely different calculation, right on the other side of the counter. They weren't rooting for you to save. They were engineering the exact opposite. They need you running on fumes. They need that Friday night where you are at your kitchen table, phone in hand, shuffling $40 between accounts, just so Monday's autopay doesn't bounce. They need you checking your balance 3 times before swiping at the gas pump. Think about it from their side for a second. You are stressed, account hovering near zero, accidentally overdrafting on a $4 coffee. That one slip cost you $35. You just paid a 775% penalty on a latte. Multiply that across millions of accounts, and you start to see where $7.7 billion actually comes from. It comes from you being just broke enough, not homeless broke. And here is the part that should genuinely anger you. There is a specific number where all of this stops. A line where you flip from being their most profitable customer to someone they can barely touch. It is not $1 million. It is not even 6 figures. It is $20,000. $20,000 sitting still in a savings account. And suddenly, the entire machine built to extract money from your panic has absolutely nothing left to grip. The overdraft fees vanish, the desperate need for their high-interest products evaporates, and the mental math finally goes quiet. You cross that line, and for the first time, the bank works for you instead of feeding on you. So why has nobody handed you this number before? Because the people profiting from your stress have zero incentive to share it. Picture someone staring at their bank statement at the end of the year. Over $1,000 gone in credit card interest alone. Another couple hundred in overdraft penalties, monthly maintenance fees stacked on top. None of that money bought a single thing. No groceries, no rent, no gas. Start with the credit card trap. The average American carrying a balance hands over more than $1,000 a year. $1,000 for the privilege of borrowing your own future. And the people stuck below that $20,000 savings line are the ones who can't pay their statement in full. They swipe for an emergency, pay the minimum, and watch 29% APR quietly eat through everything they thought they were managing. The credit card company actually has a term for someone who pays in full, someone who never generates interest. They call that person a deadbeat. Let that sink in. Their ideal customer is the one drowning, not the one swimming. And if 2 or 3 payments tried to clear on the same day, well, that account sat negative. That is $100 in overdraft fees. $100 for being temporarily short on a Tuesday. So now they need cash fast. And when you need cash fast without savings, the options read like a loan shark menu. Payday lenders at 400% interest, title loans that hold your car hostage, personal loans with rates that make your eyes water. Nobody in that position is comparison shopping. Nobody is negotiating terms. They just need to stop the bleeding. And every lender in the room knows it. That is thousands of dollars a year staying in your pocket. Instead of funding someone else's profit margin, drop your current savings number below. No story needed, just the number that is your starting line. Think about the person sitting in a parking lot after their shift. Hands still on the steering wheel, engine off. They know they should quit. The manager talks to them like they are furniture. because financially they are zero in savings means zero leverage at the table. That person does not have a discipline problem. They have a balance sheet problem. And that distinction is where the real divide lives. See, there is a line nobody frames honestly. On one side of it, you are inventory. You are someone the system can price, package, and sell products to, because you have absolutely no room to say no. On the other side, you become a person with options, and the line is not drawn by your salary or your job title, or how many hours you grind every single week. Below that line, you are handing over $150 a year just for the privilege of having a bank account. $15 a month, quietly siphoned. Because your balance is not high enough to waive the fee, you are paying rent on your own money. But that is just the surface level skim. The real extraction happens inside your nervous system. When savings sit near zero, your brain locks into survival mode. Every purchase becomes mental arithmetic. Every bill triggers a small cortisol spike. And here is what the entire financial ecosystem figured out a long time ago. A stressed brain is a highly profitable brain. You grab the first financing offer because the refrigerator died, and your kids need cold food by tomorrow. You accept a brutal interest rate because walking away is not a real option. When the car has to be running by Monday, you impulse buy something pointless on a Thursday night, because your body is begging for one small hit of relief. After a grueling week of constant calculation, none of that is weakness. That is biology doing exactly what it was built to do. And entire industries have stacked their revenue models on top of it. Now flip the frame. The predatory financing offer gets a calm no, because no emergency is forcing a yes. The toxic boss loses their grip, not because you quit on the spot, but because you could. And that single shift from could not to could rewires every negotiation you enter, every deal you evaluate, every risk you measure. $20,000 will not make you wealthy, but it drags you out of the harvested column and into the breathing column. And every institution around you recalculates the moment that happens. Picture someone 4 years from now opening their banking app on a Tuesday morning with their coffee going cold on the counter. The balance reads $20,000. They don't scream, they don't post about it, they just exhale. That slow, full breath they haven't taken in years. And the strange part is, nothing dramatic got them there. No side hustle that exploded, no inheritance check, no crypto lottery ticket. Just one painfully boring move, repeated over and over, until the math did what math always does. Here it is. It is so simple you'll want to dismiss it. And that reflex is exactly why most people stay stuck. The morning after your next paycheck lands, before you grab coffee, before you scroll through what is on sale, before you do anything at all, you set up an automatic transfer. Pick a number you can survive without. Maybe it is $100. Maybe right now it is $25. The amount almost doesn't matter. What matters is that money exits your checking account. Before your brain even registers it arrived. You're not saving what is left over at the end of the month. You're removing it from the equation before the month even starts. Think of it like rent you owe to a landlord, who happens to be future you. And that landlord does not accept late payments. Now zoom out. Say you land on $400 a month. That is $4,800 a year. In just over 4 years, you are sitting on $20,000. Your gut reaction is probably that 4 years sounds like forever. But those 4 years are passing whether you do this or not. You'll be 4 years older regardless. The only variable is whether you show up at that age with a cushion or with the same tight feeling in your chest. Every time your phone buzzes with a bank alert, something else happens along the way that nobody warns you about. That tax refund you'd normally blow on something forgettable goes straight to the pile. That streaming subscription you haven't opened in 3 months gets canceled and redirected. You land a raise at work, and instead of upgrading your apartment or your car, you quietly bump the transfer up another $50. No one notices, no one applauds, but that number keeps climbing. And every single dollar you add is a dollar your bank can no longer bleed out of you through overdraft fees and emergency interest. This isn't about discipline or willpower or any motivational poster nonsense. It is about removing yourself from the decision. You automate it once, then your only job is to not touch it. The most boring financial move you will ever make, and the only one that actually changes how the entire system treats you. So tell me something. What number are you setting that first automatic transfer to? That $20,000 is not your ticket to wealth, it is your ticket out.